world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Michael Tresco. Michael is a partner at 8 Roads Ventures, focusing on venture and growth investments in technology companies across Europe. Previously, Michael worked at Accel in London, where he was involved with investments in companies such as Funding Circle, Go Cardless, and World Remit. He moved to London from San Francisco, where he did cross-stage investing in technology companies at Warburg Pincus. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you like today's show, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Michael Tresco. Michael, welcome to Rebank.
Great to be here.
Tell us a little bit about 8 Roads.
So 8 Roads is a global investment firm. We have funds in Europe, where I am in London, India, China, Japan, the US. Manage about $4 billion across all of us investing in technology companies.
Are there any specific investments you guys have done that people might be familiar with?
Yeah, there's a bunch of them really across a couple of industries. So I think in consumer, especially in the UK, people might be familiar with something like May.com. We also are investors in Wallapop in Spain, which is local mobile classified site, and also, for example, Chewy.com, which Walmart just acquired and was, I think, the largest e-commerce exit. Then in enterprise, it's companies like Alibaba, where we were fortunate to be the first institutional investor, Neo Technology, AppsFlyer in Israel, and in fintech, which I think we're going to be spending most time. It's companies like Prosper, Zoom, or Company Gal in France, our latest fintech investment.
You mentioned the various geographies that you guys are present in. How's the team structured? Is it pretty well split across those various offices? And similarly, the allocation of the fund, is it global?
Yeah, very much so. So it's probably about 10 to 15 people per geo. Actually have a strong heritage in Asia, and Europe is the most recent one where we've been here since around 2010 as a fund.
Mm-hmm. So the European operation is based here in London, but you cover the entirety of Europe?
Correct. So investments in a bunch of countries outside of the UK, anything from Sweden, Germany, Israel, really try to cover all of the continent, which can sometimes mean a lot of travel.
So I know that one of the things you invest in is fintech, and I think you're right. We'll get into that today. But it sounds like your personal mandate is across sectors. Is that right? Is it really all of tech?
That's correct. So we focus much more on the stage of companies than necessarily the sector. So overarchingly, our main focus is to help companies scale their business. So we typically look to partner with entrepreneurs after they've built a product, they found product market fit, so they know who their customer is, what problem they're solving for them, and understand there's a willingness to pay for it, at least eventually. And when the question then becomes, how do you scale the company? And that's really where we come in, and we help through a combination of capital, strategic advice, so joining the board, helping with hiring, opening up our global network when it comes to expanding internationally or learning best practices internationally. And we also have a value add team that has former executives in industry-specific functions who help with marketing, sales, technology, et cetera, and can really answer more specific questions that company typically have at this point in time.
I'd be really curious on a personal level. What do you think it is about your specific skill set, you personally, your experience, that makes you good at that type of investing?
Oh, that's a good question. So I've done this for a little while, so some of it is a bit of a pattern recognition. So I've been investing in technology for over 10 years, so have a couple of cycles behind me at this point. I've also had the fortunate or distracting maybe experience of investing across stages. So I've looked at very mature technology companies as well as very early stage ones, and I've kind of ended up in the middle probably. So I have a bit of a toolkit as far as helping companies grow.
So let's hone in on fintech, as we said we would. What fintech investment themes are you most interested in at the moment?
Yeah, so it's funny. So I've been first looking at fintech back when it was not fintech, but it was meant literally, where it was selling technology to financial institutions, right? So risk systems, compliance, et cetera, et cetera. And so we're kind of coming full circle, where that was the initial phase of fintech. You then had the payments revolution that partially through the platform shifts from offline to online to mobile allowed the emergence of new providers, and then you went into services, which is what people mostly associate with fintech today, right? So lending, banking, et cetera, et cetera. That's kind of the latest step, and I think what we're seeing now is certainly SME banking, and we talked about this before. So we see a lot in that space, which is sort of the evolution of services. We also actually are seeing some innovation on the payment side, really going further up the stack and focusing sort of on the issuing and processing piece, but also more and more, and this is sort of the going back the full circle, selling technology to financial institutions, right? So you now have compliance-driven requirements, you have analytics, you have data, and so I think those are probably the the areas that I'm more excited about, which have to do with selling to enterprises.
And kind of, I don't know, looking forward, I don't know, medium term, longer term, do you think that fintech will kind of create the most value, add the most value to the ecosystem in the form of new vendors, suppliers to existing institutions? Or do you think it will perhaps be more of a straight disruption? Incumbent banks aren't going to exist 20 years from now. It's all going to be app-based money movement.
Yeah, interesting. So I think it's going to be both. I think the way the causation works here is incumbents are doing well, or are insulated, because a couple of years ago the thought of starting a bank was really scary and just not something anybody wanted to go into. And then over time you become more and more confident. The government encourages more competition, and so you see the emergence of new companies, which in turn forces the incumbents to be a bit more nimble, and creates an opportunity for vendors who are then selling new tools to the incumbents to compete with these new companies. And I think that's exactly what we're seeing today.
Can you tell us about any of the recent deals you guys have done in fintech, ideally? Maybe talk us through what contributed to your decision to invest.
Yeah, so we were investors in Compnicel in France, which is, I guess you could call it a neobank. It's a financial institution that allows customers to open bank accounts. And so that was a very interesting setup where they used the tobacconist network in France, which you can kind of think of it as convenience stores, as a distribution network where customers can walk in and create a bank account and walk out with a card, fully KYC'd within about 10 minutes, and then come back and use the same convenience store as an ATM network, and so withdraw and deposit cash, which is pretty interesting, I think, because it sort of plays against the trend that we're seeing among financial institutions that are reducing their ATM networks, and especially in rural areas that creates a little bit of an issue, right, where they're maybe cutting a bit too far, but also fundamentally allows you to access the part of the audience that is not really comfortable with only engaging with their bank via an app, and actually do want a bit of a physical presence.
What makes fintech similar or different from other verticals in technology from an investor standpoint? Yeah,
so I guess I would start by saying that fintech itself has a bunch of subcategories that have very little to do with each other, right? So if you're looking to enable payments or to lending money to consumers or businesses, those are fairly different things with different competitive dynamics and different keys to success, et cetera. What they might have in common is that a lot of times they will be regulated, and that not all markets are the same in terms of sort of culture and standards, which we're definitely seeing in Europe. So, Germany is a great example where the preference is to pay still with cash, right? And in the US, you still have a lot of checks. In the UK, it's a lot of credit cards. And so companies that are dealing with payments, which a lot of them do, have to take that into account, right? So a company like Square, has to really think carefully about whether its product would work in Germany, for example, or beyond working really if there's a need for that product, right, and how long it would take. And so I think those things are definitely important. And then a lot of times it's distribution and how products are being sold. So is it direct? Is it via a broker? Is it via comparison sites? So those things can make a difference.
What about in terms of the kind of the financial equation in terms of capital requirements, in terms of I suppose there's some good fintech examples of handful of engineers built a great piece of software and then scaled it out ad infinitum. But often when you talk about distribution networks, you talk about certainly the regulatory challenges, things like capital requirements that do kind of alter the equation in the sense of, I suppose from the standpoint of traditional venture capital. You guys clearly are able to source opportunities with interesting return profiles. Do you see meaningful delineation between fintech business models and more traditional pure tech VC plays?
Yeah, that's interesting. So certainly when it comes to models that require a lot of regulatory capital, right? And so starting a bank from scratch is probably a good example. It certainly makes VC investments challenging, right? So if you look at a couple of the UK players who will have raised close to 100 million probably and have not yet really launched or haven't really reached product market fit, that's challenging for an early stage investor to support, where we need to be careful to not get diluted too much, which you can support by following on in the next rounds. But if that's the magnitude of capital that you're raising, of course at some point it becomes difficult, right? So you can draw an analogy to a lot of the capital-intensive industries, like semiconductors, where similarly there's a question as to whether that is really the best suited industry to VC. The difference, of course, being that a lot of times in financial services, the regulatory capital is not actually deployed towards producing anything. It is a safety buffer, right? And so ultimately, I think in some cases, it's fair to say there are other players who are better suited to support these types of businesses early on, for sure.
I guess on the note of kind of deploying large amounts of money in fintech propositions and also kind of some of the related regulatory jurisdictional complexity, how do you think about scaling in fintech? What are the elements that contribute to companies being able to scale?
Yeah, I think it's kind of the same as everywhere else, right? So I think ideally you want to be sequential. You want to build a great product and continue working on it over time. You want to find product market fit with a narrow audience or narrow market to really figure out that the model is working. And then you want to scale that either to a new market or other categories within the same market. And this is kind of the moment where we typically come in and try to partner with entrepreneurs. And I think it's important to do that in that exact sequence, as opposed to, for example, build a product, start scaling really quickly, but forget about the product market fit phase, which we see quite a lot actually, right? And so I think that's in that way. I don't think fintech is any different than any of the other businesses. Of course, there are as we talked about regulatory requirements. A lot of times if you do need a license to get going, you could have a significant delay during which you cannot really move ahead, right? And that's where I think it's interesting if you can find a way to use this time productively to get to product market fit as quickly as possible. I think that's interesting, right? And so you see certainly banks like Monzo or N26 who have first started with a lighter model that didn't require them to get the full banking license to really acquire customers and prove product market fit around their value proposition. To then, in parallel, get the license over time while still being able to work on their company, right? So for them, I think it's a good example of how scaling can be done without the licensing product being too disruptive.
Actually, on the point of kind of the complexities around regulated industries like financial services, maybe it's specific to Europe, but with smaller kind of VC funds who maybe are a bit more specialized in their focus, I feel like I come across more funds that are fintech specialists. They're specifically fintech investors to the exclusion of other tech verticals. Larger funds, maybe a handful of U.S. funds, and certainly 8 Roads. You guys invest in fintech along with a number of other tech verticals. Does it require you as a fund to have specialists in terms of regulation, in terms of, I don't know, certain components that are specific to financial services that maybe wouldn't be important, relevant for other parts of technology?
I think the answer is the same for all industries, really. All else being equal, you want to be as much of an expert as possible in it. The problem, of course, is you only have 24 hours in a day, so the amount of time you spend focusing on one industry means you're not getting experience and exposure to others. And the reality is fintech has 90% in common with every other industry in terms of what it takes to scale and build a successful company. So I think it's just a matter of saying how do you want to prioritize your time.
So do you guys internally, are there specific partners that focus on fintech and others on other segments? Or are you guys all kind of cross-sector generalists, I suppose, for lack of a better word?
We try to do it cross-sector generalist just because we think it's really beneficial to be able to learn from experiences and patterns that work in other sectors and bring them over. At the same time, as you said, there are certain things in fintech that you have to understand as you think about companies, be it regulatory requirements or cultural differences in the markets, and that's just something that you do over time, right? So, certainly I have looked at plenty fintech businesses. I would never say I look at it exclusively, but I think I have a fairly good understanding of how things work.
We talk a lot about network effects and user growth in the context of startup success. In fintech, is it better to dominate in a single vertical or geography, or to capture a small percentage of a huge market? What are the advantages and disadvantages of each?
Yeah, so I think it's better to dominate a large market, right? So
fair enough.
I think that's the short answer, right? The longer answer. So the way we think about this, we think about the TAM, the total market, is always the question about how big does it have to be, and et cetera, et cetera. Clearly, it's an important consideration because if the opportunity is small, then that caps the potential of the individual company, no matter how good they execute, right? And so kind of what we think about is the achievable TAM, which takes into account not only the size of the opportunity, but the extent to which it's actually achievable, right? So auto manufacturing is a very large market. That being said, it is fairly challenging to gain market share in it. So the fact that it's large in itself doesn't really mean it's more exciting than a smaller market. You have to also take into account how easy it would be to gain market share in it, right? And so if you apply that thinking, on the one hand, clearly it seems easier to achieve a small market share in a large market and more appealing because you say there is more room to grow and there is a lot more you can do because the market is so large. On the other hand, a large market is typically indicative of stronger incumbents that have grown and might be significantly more difficult to displace, right? So if you apply that thinking to it, that could be the challenge with it, right? But certainly a large market doesn't hurt. And then on the flip side, on the small market and dominating it, the challenge with that is, so the attractiveness, of course, is if you dominate a space and you're in a really strong position, that can be a very attractive business, and over time your financial profile is going to reflect that attractive position. On the flip side is it's quite difficult to dominate any market if it's large or small, just given the competitive dynamics. So to some extent, you have to ask yourself how realistic it is to bet on really high market share.
Is there such a thing as a right size for a company? Does each company have kind of its optimal size, and do investors see that, or is the raison d'etre of every company to launch, raise money, grow customers, and effectively get as big as possible?
Oh, that's an interesting question. So, I mean, there's probably a right side for the type of capital you're looking to raise and type of people you want to partner with. So, clearly, early stage investors are looking for different size and profile of company than, let's say, debt providers or public market investors. And so based on that, you could have something like a right size, right? But ideally as a company, you will go through a natural trajectory where you outgrow your current investors and their value add and skill set, which, I hope all of our companies do.
That was a very educated answer, I think, to probably
there you go.
Poorly phrased question. Are there any specific technologies or macro trends that you expect to shape the next few years of startup investing in fintech or otherwise?
So, to get the buzzword out of the way, I think AI, machine learning, and all of those things will increasingly become table stakes when it comes to building technologies, similarly to what we've seen with big data and mobile over the last couple of years. So I'm not necessarily sure there's going to be a lot of AI companies, but I am fairly confident that X years from now, most companies will have a developed AI strategy and will be utilizing the core principles to provide a better product. So I think that certainly will see happen. And I think, as with all introductions of large-scale new technologies, that will mean that some incumbents will become vulnerable and open themselves to disruption from newer entrants who are using these technologies effectively, right? So I think that's probably going to happen. And then the other thing that we're continuing to see play out and has been a trend for a while is just the convergence of consumer time spent around mobile devices, right? And so really strong platform shift that similarly creates vulnerabilities for incumbents and allows new players to come in who really operate more effectively around that new platform, right? And then what that means really is that the consumer that likes to engage with a mobile device likes to do so both in their free time as well as at work, which makes it really interesting for enterprise vendors, because they now more and more have to cater to individual consumers and their preferences, a lot of times tied around the mobile, rather than these large unnamed enterprises where one person makes a decision on behalf of many employees, and then you don't really have to care what the individual employees think, right? And so I think that's going to force a significant change in how people think about usability and design. And again, that's going to present some really interesting opportunities where large incumbent vendors will have to realize that their product either needs to change and really be more user as opposed to enterprise friendly, or face disruption from new providers who are really appealing to the end user.
Wow, isn't that going to be a bright future when we have good UX on the tools that we're forced to use at work?
No matter what from all of this, I mean, the consumer, be it at work or at home, is the big winner. And so I think that's the exciting part, right? And especially in fintech, I think we're seeing it more and more from a venture capital perspective. We can debate whether certain models make sense or to what extent we think certain companies are going to be big or not. But as a consumer, we live in a fantastic age where more and more products are easier to use, less expensive, and allow us to do things that we couldn't do before, right?
How do you think banking and financial services in terms of landscape, in terms of business models and delivery mechanisms, how do you think that industry will change in the next, say, 10 years?
Yeah, I think so. Fundamentally, more and more, there's just going to be a better understanding of the individual customer and their needs and preferences. So going away from one or two menu items to really millions of different choices that very much are focused on the individual and might change based on real-time inputs, right? And so we're clearly seeing that already online, right? Where you and I will look at the same page and see different results, and most of the time that's actually a good thing. And so I think that that type of personalization is going to certainly extend to financial services that are catering towards the consumer, because the consumer expects that more and more, right? And the other point is the way in which that information is delivered is going to be much more consumer centric. So again, it is mobile, it is voice, and it's going to be at a time that is convenient for the consumer, right? As opposed to having to go to a branch and line up and do it from 9 to 12, and then after lunch break you come back.
Before we go, I'd like to ask you a few rapid fire questions. What are you most excited about in fintech, and why?
I think fundamentally it's making existing financial service companies more efficient through technology.
If you could do it all again, what would you do differently?
Probably take a few more calculated risks.
In your investments or in your life?
Definitely both.
What advice would you have for someone considering starting a fintech company?
Probably the same as for every other startup, is to really understand what problem you're solving for whom, and how much better your solution is versus the ones that are out there.
What resources would you recommend to people looking to learn more or get ahead in fintech?
Very good question. I think it's probably talking to people in the industry. It's attending events and asking all of them that question. I think groups like Innovate Finance do a nice job of being a hub, and then there's plenty of blogs out there that tackle that topic.
Well, huge shout out to Innovate Finance. We connected through them, so thanks to them for the intro. Michael, what's the best way for people to find out more about your work and connect with you directly?
So LinkedIn and Twitter are probably the easiest channels. And other than that, we are at 8roads.com. So definitely come check us out.
Michael Tresco, thank you very much for joining us today.
Thank you for having me.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.